The Swiss bank UBS plans to slash thousands and thousands. In fact, the number is near 10,000 jobs that's being reported on right now on a number of media websites, and to cut costs in a major revamp designed to boost earnings. Other banks trying to come to grips with the Eurozone crisis are expected to follow suit as well. Jack Barton reports.
Having posted a loss of $2.3 billion for the last 3 months, Swiss bank UBS announced on Tuesday it will slash 10,000 jobs. The cutbacks in the group's investment banking operations follow a number of recent scandals, including more than $2 billion in losses incurred by a single trader and an investigation connected to lending rates between banks. But the cutbacks are being blamed primarily on the economic crisis, as well as the tougher regulations that have followed.
The impact of the new capital requirements rules, the new requirements for collateral, and the new requirements linked to basically the change of the industry are going to affect their business model, as they are affecting also the other banks.
UBS may be ahead of the pack in announcing major cutbacks, but the bank is unlikely to be the last. Like many European banks and financial institutions, UBS is reeling from the combined blows of a stagnant economy, along with the sovereign debt crisis, which in many countries has now also become a banking sector crisis. Spain's banks are still waiting for up to 100 billion euros in rescue funds promised by Brussels. According to the European Central Bank, nervous savers have already withdrawn 154 billion euros from Spanish banks this year, and the number of toxic loans is rising. But even banks in core countries like France are now feeling the strain.
We're going to see all the other banks follow suit by the end of the year. We're going to see more reductions in the number of people working for organizations, simply because technology permits it and outsourcing deals actually facilitate this kind of thing. So we're going to see more of this. All the major banks should lose about 10 to 15% of their workforces over the next 4 or 5 years.
European leaders hope the EU's proposed banking union will ultimately restore confidence in the bloc's finance sector, though even the first phase of a regulatory body won't begin operation until next year at the earliest. Jack Barton, CCTV, Brussels.